going on, guys? It's K-Dub here with another episode of CryptoZombie. Welcome back to the channel. Hope you're having an awesome day today. Having a look at Bitcoin and cryptocurrencies, we're seeing a little bit of a mix across the board. However, we have seen Bitcoin attempt to make a recovery on the little dip that we took yesterday. Now, we are actually getting to a sort of critical level right now. I know we've been looking for a huge move for Bitcoin, potentially the third week of this month. However, having a look right here, we are getting very close towards the top of this potential resistance, and Bitcoin could be looking for a big move relatively soon. So, as we've been talking about on the channel, there has been a lot of negative sentiment, a lot of bearish sentiment in the markets, and as you may know, I have remained relatively bullish. Now, this doesn't mean that we couldn't potentially have another retest, go down to the CME futures gap, but I'm going to show you in today's video why I still remain incredibly bullish on the Bitcoin price. In fact, today, Bitcoin literally just broke history and hit the highest hash rate we have ever seen so far. Fundamentals are booming. Just because price is lagging doesn't mean we should be freaking out, right? So in today's video, I want to show you why I do remain incredibly bullish. I'm going to show you what some big time investors are doing and what the traders are betting on right now. You might actually be surprised about the results. Also, the UK FCA banning crypto derivatives is getting absolutely hilarious backlash right now, with over 97% of people basically saying you're crazy. Why would you even do this, right? So that actually shows some positivity in the market. And of course, I want to talk about the fact that we've seen a lot of the DeFi altcoins having a little bit of a rough time. However, I'm going to tell you right now that what we just witnessed in the past 2 months with that crazy explosive crypto move, I am telling you that was just the beginning. It was just a test run, and I promise you that the next altcoin cycle, when it does happen, is going to 10x, 20x everything that you saw. So stick around. If you're new, if you're getting bored with the crypto prices, well, things could get interesting. Now, before we get into all that today, of course, got to remind you guys, 4 hours from now, we do have an AMA. It's at 3 p.m. Eastern time. If you got, oh, by the way, thank you for everyone who's been dropping comments. I really appreciate it. Like I said, head on over to Crypto Atlas. I will have the link below in the pinned comment. And if you want, you have to drop a comment. You have to sign up. It's free. And drop a comment and I will get back to you. I will answer your questions in the AMA because it's limited. It's only 45 minutes to an hour. So obviously the earlier you get there, the more likely chance that I'll have to actually answer your questions. Okay. So that is what we're going to talk about today. If that sounds good to you, you know what to do. If you are not subscribed, definitely consider it. And let's dive into the charts. Now, having a look right here, you will notice that we are getting to the top of this basically to this resistance right here. Now, it's not the highest resistance, but I do believe that if we break out of this sort of medium level range, we could potentially retest this blue zone again, and we could see Bitcoin up to $11,100. And if we were to keep steady and close a nice daily candle inside of this blue zone right here, then I actually think that we could see Bitcoin push upwards towards $13,000 or higher. Now, I know, before we get too excited, there is the potential chance that, we just keep bouncing around in here for a couple more days, maybe till around October 17th, 18th, and then we may have to sort of assess the situation. Obviously, falling into this blue zone makes us a little bit more bearish. However, a retest at 9,005 is still okay. I would still be bullish. We'd still be on the long-term uptrend, but I just want to let you guys know that as of making this video, we are pushing on the resistance. So we could be looking for a very big move within the next 24 to 48 hours. And like I said, if we go to the upside, we're going to be seeing Bitcoin at around $11,100, $11,200, okay? That is the positive news. And you could see right here currently the significance of the level that we're at right now and why we're having this sort of doji candle right here over on the monthly so far is because of the fact that this level right here represents where we closed out in June of last year when we had not the all-time high, but the high of June, which was roughly $14,000. But keep in mind, we closed the month at $10,763. And we're at $10,746 right now, according to Bitstamp. So we are right at that level. So there's a lot of pressure, a lot of resistance. If we do break the resistance, it'd be extremely bullish. So I just want to let you guys know, be prepared. Could be a big move, right? But at the same time, don't be discouraged if, we do get rejected again one more time. I've actually been anticipating something like that. And, as you guys see right here, we would basically just fall down, retest this line. But on the plus side, breakout to the upside, we are definitely going up to the $13,000 level. Maybe not immediately, but it could happen within a week or two, right? Now, I just want to talk fundamentally about Bitcoin hash rate hitting a new all-time high. It touched 170 exahash for the first time in the history of Bitcoin. This is an increase of around 40% since the halving in May, substantially adding to the security of the network. And shout out to Jari for sending me this photo. I actually almost missed it. Thank you. I always love when the hash rate hits a new all-time high because it helps me to realize, it basically helps me to get grounded. Sometimes you get really sort of addicted to these price movements, but then you got to really look at the bigger picture. The network is growing. The fundamentals are up. Price, it'll get there, guys. I promise. And also, you know who else is really bullish right now? Option traders. According to data from Skew, the CME they traded $48 million worth of options during the day, which is the highest daily volume figure since July 28th. The number marks a 300% rise from Tuesday's figures of $12 million. That is a big difference in interest. So what is going on? Well, volumes have surged as some traders took 14,000 and 16,000 strike prices and 18,000 and 20,000 strike prices for December of this year. This is potentially a bullish thing, right? Traders are unlikely to sell spreads in the current low volatility environment. So to simplify, traders likely bought call options at 14,000, expiring in December, and simultaneously sold December expiry calls at 16,000. Similarly, calls expiring in March 2021 were bought at 18,000 and 20,000. So what does this mean? What does this mean? Well, traders are employing bullish call spreads when they expect Bitcoin or whatever underlying asset to rally in the near term. So this data right now suggests that these traders foresee a Bitcoin rally. They believe the upside will be capped at around $16,000 by the end of this year and $20,000 heading into quarter one of 2021. But the key takeaway of what is happening right now is they are mostly looking for higher prices. Now, I showed you plenty of times that there is proof of massive institutional accumulation, okay? We know these guys are buying it up. We've seen Grayscale buying more Bitcoin than is even being mined. In fact, they themselves are responsible for the majority of the demand. And considering we really don't have the retail FOMO coming in yet, a lot of people basically sort of forgot about Bitcoin right now, right? Your friends, no one's really talking about it. Think about what will happen when that retail FOMO comes back in again and they realize that there's really not a lot of Bitcoin, that to meet the needs of everybody's demands as well. Then they're going to realize, well, let's see, Bitcoin's got to go from 20K to 40K for me to double my money. But this altcoin over here, right? And that's when you're really going to see that massive rally. So to everybody who thinks that the altcoin rally that we saw for DeFi, that was it. That was just the tip of the iceberg, let me tell you. And Vinny Lingham, by the way, he has, he's the CEO of Civic. He's been in crypto for quite some time. People do respect him. He tends to make pretty good calls. I'll give him some credit. He actually when he says, he actually kind of like called the DeFi boom before it really even exploded. And he says, I haven't been this bullish on Bitcoin since 2016. Macro events are teeing us up for another bull run. Bitcoin could go 3 to 5x in the next 12 months, but if it goes 5x plus, we're back to bubble zone. Key indicator is Bitcoin dominance. If it drops below 35% during the run, caveat emptor, which basically means buyer beware, right? Which is why I said if you guys don't want to get fully exposed to altcoins, you can actually hedge into XBTC, which I've actually done. So that way, if Bitcoin does lose its dominance, you can actually hedge against that. Really cool, awesome token. You guys should definitely check it out. Probably the only real rebase token that I'm really personally interested in right now at the moment. But you can see right here, let me talk about another reason why I am still bullish on Bitcoin. The government of Venezuela does not know what else to do to control its economy, so guess what they've decided to do? Print money. and lots of it. Sources close to the Venezuelan government reveal that the country's central bank has bought 71 tons of paper to print money. Experts believe the new batch of paper will supply the country's demand for bills of the highest possible denomination, 100,000 sovereign bolivars, or the equivalent of 22 cents in dollars. So, yeah, just another reason why we need to buy Bitcoin. Also, the fact that we are seeing retail and the public wake up to this, basically the fact that for example, let's take this story. So the FCC said they're going to ban crypto derivatives. That was the big news. A little bit of a market impact, not really much. Another reason why I remain bullish. All of this negative news, we have FCA banning crypto derivatives, BitMEX getting shut down, John McAfee getting thrown into jail, Trump coming out basically saying that the stimulus, right, is going to get delayed. And yet, what do we see in the Bitcoin price? Just these little, tiny, little moves. I mean, if we were legitimately bearish right now, we would be seeing huge dumps. 10%, 15%, 20%, 30% dumps. We're seeing 5% moves. This is telling me that something is happening in the background. Something big is coming. This could be the calm before the storm. But getting back to the story of the FCA banning crypto derivatives, they actually compiled a study shortly afterwards, and they asked 527 participants from firms, trade bodies, retail consumers, and EU national competent authorities regarding their views on the matter. The results were quite clear, demonstrating that almost all of them, 97%, opposed the FCA's proposal that digital assets, derivatives, and ETNs need to be prohibited for sale. The majority argued that cryptocurrencies have intrinsic value because they are accepted as a means of payment for goods and services. They brought out household names like Starbucks and Microsoft that allow Bitcoin payments through services offered by Bakkt. Furthermore, the participants asserted that retail clients are capable of assessing the value and risks of cryptocurrency derivatives, and the prohibition would be disproportionate. Instead, they suggest the FCA use other measures to achieve its goal of protecting investors, right? You can go to the casino, gamble the mortgage away, put all your money on red or black on the roulette table, but just don't bet on Bitcoin price, right? We're trying to protect you, right? Yeah. Okay. Well, here's an interesting thing. This tweet's been getting a lot of mixed emotions. So Pompliano posted, Jeff Bezos could shut down most of these Ethereum-based DeFi apps by simply shutting off AWS, Amazon Web Services. You're not decentralized if you just spin up servers with Uncle Jeff. I wanted to open this for a little bit of discussion and see what you guys thought about it. Very mixed emotions. Eric Voorhees says most Bitcoin nodes also run on AWS because most servers of all kinds run on AWS. Mr. Wales says seeing Pomp get lots of resistance from this tweet, but he is 100% right. Many refuse to accept it because they're likely overly invested in DeFi scams right now. DeFi equals delusional finance, right? So I just wanted to get a little bit of an opinion on that. Was DeFi just a big bubble? Really big talk right now. I think most of those coins were terrible. I'm just going to be totally honest with you. And actually what happened was a lot of the sort of good potential money went into really bad tokens, like tokens named after food products. And there still are good companies, good DeFi products out there, but they got overshadowed by these like get rich quick sort of massive yield farm pump tokens. And I think unfortunately it caused a big crash in the markets. Now, I think there's a lot of altcoins right now that a lot of people are saying, hey, my altcoin is down 60%, 80%. In some cases, you're probably screwed. I'm going to be honest with you. You're probably not going to get your money back. But there are definitely some DeFi projects out there that I still actually am holding right now that I do believe in, and I think that they will have a recovery because long-term, good projects with good services, they will prevail. But unfortunately, it got muddled with all this other stuff, right? So that is basically just that situation. But talking about what's going on with, this right here, I wanted to mention basically what ADX and Chainlink are doing. So if you guys, like proof of stake, basically when you stake, you get a proportion of the tokens in reward for keeping the network safe. However, one of the biggest problems is that when you're staking tokens, the token's value fluctuates based on a dollar amount. So you could be getting, I don't know, some astronomical numbers, 60%, 100%, 200% APY, right? But if the value of the token is falling, then you're still losing money anyway. So I want to talk about what ADX actually introduced, and they're working with Chainlink. So if you guys don't know what they are, they basically use a combination of peer-to-peer technology and blockchain to track and verify traffic using a quorum of validators, and allows advertisers and publishers to form a secure payment channel between one another, eliminating costly intermediaries. So that is essentially what ADX is doing. Now, by integrating Chainlink's data oracles into the staking system, the platform will be able to pull in accurate price data to help balance staking rewards with market demand for ADX tokens by maximizing the returns for stakers while maintaining the health of the network. So here's how they're doing it. I'll tell you in a second, but it says this will be achieved through their pioneering new elastic supply mechanism, which acts to ensure staking pool participants maintain their stake while the price is climbing, or decreases ADX issuance if the price falls by using oracles, obviously doing this through Chainlink and the partnership, right? So as per data from Masari, less than half of the top 10 largest stackable cryptos by market cap actually offer a positive ROI in USD terms at the moment. In many cases, this can be explained by excessive new coins entering circulation, potentially suppressing the price of the assets on exchange. So ADX looks to avoid the situation with the ADX token through its elastic staking solution, which it will use to ensure stakers net a strong return on their assets without adversely affecting the ADX market. And I think this is a really cool breakthrough, and I would like to see a lot of other projects implementing something like this, because this is one of the biggest reasons why I personally don't really like to stake, is because of this actual situation of dealing with the devalue of the tokens that I'm holding plus the amount that I'm getting back. So hopefully this elastic sort of staking will be something that a lot of projects move forward and sort of take this example from ADX. So I think that was really cool. These are the things that get me excited. In the crypto space, you did see a big pump, by the way, for EOS the other day. Lots of people were asking me, hey, K-Dub, what's going on with EOS? I don't really mention EOS too much, honestly. It's not really a project that I've really gotten very interested in. I mean, for a while, I actually held some EOS tokens, like, you know, when it first came out. But regardless of whether or not you support it, it did have a pump. And that was basically because on Tuesday, you had Block One announcing that Google Cloud had begun preparations to list itself as a candidate to serve as a block producer. But no, Google Cloud is not getting into EOS for tokens. They say we're broadly interested in open source protocols and distributed ledger technology, which is why we're joining the EOS community, but there isn't a revenue model for Google Cloud in connection with participating in open source protocols. So this doesn't really mean that they're not supporting it, they're not getting involved, they're just not really looking to make money off of it, right? As if Google actually really even needs any more money regardless. But lots of news today. A few more things I got to catch up on super quick. So we did have Arthur Hayes stepping down from BitMEX after the allegations, as well as the CTO Reed. They have been replaced with others. They are not closing or shutting down BitMEX. They're still going to go through with operations. They're still going to go through with their KYC and advanced program for figuring out who you are, etc. But yes, looks like they have stepped down. So that could potentially be the end of the story. We do have Unicoin, which is one of the earliest exchanges to enter the Indian cryptocurrency arena in 2013, now being funded by Tim Draper. So Tim Draper is getting behind this as well. This is good for India. I know India is always on the fence whether or not they're supporting or not supporting cryptos, but this is nice to see Tim Draper supporting this. And I also want to mention that the Travel Rule Protocol, a working group favored by banks and traditional finance institutions, and focused on bringing crypto into line with global anti-money laundering standards, has released the first version of its API. So yeah, I mean, you can see right here, group backed by ING Bank, Fidelity, and Standard Chartered released crypto AML tools. So why would they be doing this if they didn't see a future for cryptocurrencies? So obviously there's a lot going on right now. You can see that despite a lot of the bearish sentiment, it's not like projects are stopping. It's not like they're not evolving, you know. I mean, they're creating these tools, they're creating these products, and yeah, we did see a lot of yam, tomatoes, pickles, and everything else in DeFi, but that happens in crypto. I still think there's a lot of important infrastructure being built in the background, and I'm still extremely bullish on Bitcoin specifically and cryptocurrencies, you know, even smart contract platforms like Ethereum, Polkadot, Elrond, right? Things like that, Cosmos even. So yeah, I mean, so what? Things are weird right now. People are freaking out about the virus coming back. Trump's acting crazy as usual. BitMEX is in trouble. I mean, are these things we haven't seen in the crypto space? And yeah, shout out to Doug. I'm officially, basically, a meme. So thank you so much for coming back to the channel. You guys rock. You're the reason that I do this every single day. My name is K-Dub. This is CryptoZombie. Until next time, stay crypto. And of course, peace out.